Very good evening and welcome to the India Development Debate. I'm Tamanna Inamdar. It has begun with 80 paise a litre today, but the question is, how far will it go? Fuel prices, that is the prices of petrol and diesel that you and I pay at the pump, have been hiked after 139 days. Even as India grapples with a spurt in crude prices, a commodity we largely import. Meanwhile, the prices of LPG cylinders have also been increased by 50 rupees. Today on the show, we look at what the impact of these hikes is going to be on household expenses, on your wallet, and on inflation overall. Also on the show today, the debate that has caused a storm on social media. Do you really need your idli or your momo within 10 minutes? As Zomato joins the race of delivery within 10 minutes, we ask, is this a necessity? Is this a solution to a problem that does not exist, or is this truly innovation? So stand by for that debate as well. A lot more coming up on the show tonight. Before we get to our lead debate and our big stories, let's just focus on that last headline about how New Delhi is the world's most polluted capital city yet again. This truly should be the biggest story today. This is something that impacts all of us. It's not just Delhi. Out of the top most polluted, 100 most polluted cities in the world, 63 are from India. So we make up for 63 of these cities. This fact has come to light in the 2021 World Air Quality Report, which says that no single country has met the latest WHO annual air quality guidelines. Some food for thought, even as we talk about the impact of this. Now, meanwhile, a double whammy for the common man, and that really is the story. We've been waiting to see when fuel prices will be hiked. It was expected that soon after elections ended and voting ended in 5 states, this would happen. It has finally happened, and one can say with fair certainty that this won't be the end of it. So 80 paise per litre hike in petrol and diesel has been announced so far by oil marketing companies. This along with an increase of rupees 50 per litre per cylinder for gas cylinders now. This means that we are just about touching the tip of the iceberg on that big gap we have right now. The big gap between what we pay at the petrol pump and how much crude prices are actually costing us. So crude prices have gone through a massive spurt recently because of a number of factors, but primarily among them the geopolitical situation, which sees a conflict between Russia and Ukraine. This has put the world on edge, and crude prices have consistently been going higher. We import most of our crude requirements, so obviously this impacts us. The rules are that the end consumer should pay for as much as crude costs. That has been cushioned so far. That's why we've seen this hike after 139 days, which coincided with elections in 5 states. Now, what happens next is the question. To speak on this, I'm joined today by Anubhuti Sahay, who's the head South Asia Economics Research at Standard Chartered Bank, Upasna Bhardwaj, senior economist, Kotak Mahindra Bank, and Debasish Mishra, partner Deloitte India, joins us on the show. Welcome to all of you, and thank you so much for speaking with us. Let me go across first to Upasna. Upasna, just your overall take. The first question we started with, is this just the beginning, 80 paise per litre? Obviously, there is a lot of ground to cover for OMCs.
Yes, absolutely. I think if you were to just look at the losses that they were incurring because of the pause in the hike that was expected, that in itself warranted a 13 rupees hike. And to that extent, it is just the beginning. And we obviously do expect consecutive increases either on a daily basis or whichever format the OMCs will have to follow. But clearly, with crude oil at this point in time around $120 a barrel, somewhere that is the number we'll have to look at the petrol pump, petrol prices at the pump level. 119, 120 is what we believe will be the final outturn if we were to average around $120 a barrel crude.
Yeah. Anubhuti, let's talk about the impact that we're going to see now on inflation, because at the end of the day, that's the worrying part. There are various calculations out there, but is the biggest concern what the hike in diesel prices is going to do to inflation concerns, inflation trends?
I think when you're talking about inflation, both the impact of petrol and diesel on one side, plus the increases which you are likely to see on cooking gas. I think on cooking gas, what you mentioned earlier, we saw a 50 rupees increase or a 5.5% increase in cooking gas prices. That's again just a beginning because gas prices have shot up across the world, and probably we are likely to see staggered pass through to the consumers. As far as impact on the on inflation is concerned, I would wait and watch out for a couple of things. First of all, where crude oil prices finally stabilize. Whether they stabilize at an average of $85 for next 12 months or whether they average at $105 for next 12 months. I think that will become extremely crucial to assess the impact on inflation. The second factor to watch out is the excise duty cut. Right now, what we have seen is a very small increase in retail fuel prices, which was announced last evening. Can the government really go and pass on, like 12 or 20 rupees of, increase in prices to the consumer? I really don't think so. And at that particular juncture, then we will have to focus on how much of the burden is shared by various stakeholders. That is the government, oil companies and the consumers. And once we get these numbers, once we get more clarity on these numbers, probably that will be a better time to talk about the impact on inflation. Nevertheless, for simple, statistics, to give you some statistics, a simple rule of thumb is that if there is a 10% increase in crude oil prices from a base case, assume it's $85, then your headline CPI can go by 20 to 40 basis points, assuming there is a full pass-through to the consumer.
The question now here, and let me come to you, Debasish, for this, great to have you back on the show, is are oil marketing companies as stressed about this as they make out to be? What I'm trying to ask is, do they have more of a cushion than we understand? Because the fact is that they've had a few good years where they have not passed on the benefits completely of lowering crude prices. Now we are in the reverse direction. And the question really is that do they have a buffer where they can take a deeper cut and need not pass on this 12 to 20 rupees entirely?
There are a couple of things. One is not that, they have been having over recoveries over the years. Probably in the month of November, they had some bit of over recovery and we do not know yet. I mean, these are analysts who are speculating. But definitely in this quarter, there will be some inventory gain. And also the GRMs are at a very healthy levels. So financially, it's not that, the entire thing will go to the bottom line and they will be bleeding. But obviously, they cannot, the marketing margins are hardly 2.5 rupees. So you cannot have a massive amount of under recovery, and it has been building up. Like your report said, if there is a 4 months of under recovery, that's also cumulatively building up. And I don't think that's a sustainable situation, and everybody understands that the solution has to balance every stakeholder's interest. I mean, in FY21, central government collected 3.7 lakh crores of excise duty, and the state governments collected almost 2.1 lakh crores of VAT from the sale of petrol and diesel alone. And that, I think that almost, balanced the fiscal situation in that year. And almost this year also, other than the cut that we had of 5 rupees and 10 rupees in October, November, almost the full year, there has been a good amount of collection. And the demand have also gone up. So I do not think we see a situation where the oil marketing companies can absorb the entire amount. What we are expecting is probably this is a beginning. They do not want to give a full shock at one go. So probably gradually this will be increased, and at the same time, probably central government will also consider cutting down on the excise and prompt some of the states to also cut down on the VAT.
That really is the million-dollar question, isn't it? That
yeah.
Will the government take cushion or give cushion to consumers, and do they need to? Anubhuti, do you want to come in on this aspect? Is it now high time, and is it inevitable that the government will have to cushion the blow by taking a further hit, excise duties for the central government and then VAT for state governments perhaps?
I think, Tamanna, on these issues, probably decisions have to be taken in a very considered manner. And the reason I say it is because oil prices have risen to these levels because of the ongoing geopolitical tensions. If for some reason, 2 months down the line, if prices come down, it will not be possible for the government to reverse if they deliver any deep cuts at this particular juncture. So in my personal view, I think any excise duty cut has to be delivered after due consideration, and when the government has clarity that a certain level of oil prices are likely to sustain for next 12 months. It's important to cushion the impact on consumers and the economy, but it's equally important to protect the revenues from fiscal perspective. With such elevated commodity prices, there is already too much of claim on government's expenditure, whether it will come in the form of food, fertilizer, or fuel subsidy. That is something which we'll have to watch out for. And somewhere a fine balance has to be struck. And therefore, I would say that I don't think it's really high time to go ahead and rush for very deep excise duty cut. Probably they can still wait and watch to understand how this whole geopolitical tensions play out, and then deliver excise duty cuts if they are still required. In the budget, the government has already penciled in 1 to 1.5 rupees cut, which they can deliver without impacting their fiscal maths. But anything deeper, 5 or 10 rupees cuts, that's something which they will, in my view, they should wait for a little bit more clarity on crude oil prices.
Yeah, Upasna, that similar point to you. Do you think there should be a wait and watch to see how much the government can protect consumers as a primary stakeholder? Because, it's not just petrol and diesel. You've had inflation rising on all fronts. You've had basic staples, food inflation, all kinds of costs going up. So do you think there is a case for an excise duty cut earlier rather than later, or would you also recommend a wait and watch mode?
Tamanna, it's a matter of time, I think. Clearly, the government will be delivering an excise duty cut. Like Anubhuti said, I think a couple of rupees was already priced in, or rather budgeted. I think 5 rupees is a given. Maybe they'll wait for another 1 month or so and then really deliver excise duty cut. The reason is absolutely like what you said. I'm more worried on the broad-based, generalized nature of inflation. This entire crisis that we're talking about, even if the crisis-related premium was to subside, the supply-demand imbalances that are arising and the amount of time that it will take to sort that out, I remain a little worried on that, which means the commodity prices probably remain elevated. And when I say commodity prices, it is across the board, all input prices. And that's where my worry is. So I think wherever there is a possibility to share the burden, the government would step in. And that's why I think we will see it sooner rather than later. So at least a 5 rupees cut is what we are pricing in somewhere around April. Now it could be mid-April or sometime, but we don't know exactly. Sometime in April, we are pricing in a 5 rupee cut in excise duty to kind of tackle these inflation pressures.
Sure. What about rate hikes? And let me take that to Upasna again. Are we going to see the RBI having to sort of, push the accelerator a bit on rate hikes with the current situation boiling?
No, I think, if you look at the situation that is panning out in the February policy itself, RBI had very categorically specified that they are looking to support growth. That was, of course, before the crisis really set in.
Yes.
But there was already upside risks to RBI's own inflation projections that they had made for the full year that they had provided for 4.5% inflation. That was already much below the market consensus across the board. Now, of course, the scenario is very different. Inflationary pressures are up and looking again much more broad-based. But having said that, I think RBI will continue to focus more on the downside risks that are emanating from the growth side and at least wait for a while before they really go ahead with any rate hikes. So at least in the April policy, we do not really expect any change. And post that, it will be more a wait and watch policy when it comes to June.
Debasish, we've been talking and we started this debate with a question that we started with 80 paise, but how much more to go? Do you have a ballpark number of how much now needs to be passed on to the end consumer to make the whole situation viable for all stakeholders?
I mean, there are all kinds of numbers floating in the market, and the range is pretty wide because people are also, I mean, the general thumb rule is per dollar increase in the crude prices. It's almost like 45 paisa to 50 paisa increase, which is needed in the retail price. But, you also have a cumulative under recovery. So we really do not know what is the thing. And, with also the GRMs are also at a very heightened level. So this also must be adding to the under recovery. I mean, the range could be anything. So I would want to hazard a guess because it's not very transparent in terms of how it is priced and how much was the earlier over recovery.
Right.
Because it's not public. So, the OMCs do it themselves, as the government has been repeatedly saying. So probably there will be a series of these increases.
That's, I think, one point that can be stressed upon. Perhaps there is now a need for more transparency on how this whole system is working. It's really anybody's guess. It's supposed to be linked to international prices, but then you have no hikes for 139 days. Then you suddenly now have the first set of hikes and nobody knows what's happening next. So a clear plan would perhaps help with forecast, but in any case, brace for inflation. That seems inevitable at this point. Higher prices for consumers. Thank you so much to all of you for joining us on the lead debate.